Herzlich willkommen und schönen guten Nachmittag nach Österreich. Good morning to our Canadian speakers here in Canada. Not all of them are in Toronto. I will start first my presentation in English. I will switch to German and then the speakers will talk in English. And we have also our question and answer session later in English. Noch einmal herzlich willkommen zu unserem Webinar. Mein Name ist Gregor Postel, ich bin der österreichische Wirtschaftsdelegierte hier in Kanada, Toronto, und freue mich, dass wir doch ein sehr zahlreiches Interesse haben von österreichischen Firmen zum Thema E-Commerce in Kanada. Ich darf Ihnen am Anfang kurz ein paar Housekeeping-Regeln mitteilen. Das Webinar wird aufgezeichnet. Das heißt, wenn Sie sich früher auslinken müssen oder wenn Sie erst später dazukommen, kein Problem. Sie erhalten ein paar Tage später den Link mit der Videoaufzeichnung und auch die Präsentationen schicken wir gerne mit. Wir bitten, da es über MS Teams läuft, Ihre Kamera und Ihr Mikrofon auszuschalten, damit wir keine Interferenzen haben und die Sprecher in Ruhe vortragen können. Sollten Sie technische Probleme haben, dann schreiben Sie uns bitte im Chat. Wir melden uns dann bei Ihnen. Aber bitte geben Sie nicht Ihre Telefonnummer hinein aus Datenschutzgründen. Wir finden dann schon heraus, wie wir Sie am besten kontaktieren können. Und der Chat ist natürlich auch dazu da, dass Sie Ihre Fragen hineinschreiben, damit wir dann bei der Question-Answer-Session dementsprechend auf Ihre Fragen eingehen können und hoffentlich Punkte beantworten können, damit Sie leichter im E-Commerce und im Online-Markt in Kanada starten können. Wie schaut die Agenda aus? Eine Einleitung, wo ich auch einen gewissen kurzen Überblick geben werde über den E-Commerce-Markt in Kanada. Dann werden die Expertinnen und Experten präsentieren und wir haben eine Q&A-Session zum Schluss. Zur Einleitung, wie erwähnt, es folgt gleich ein kurzer Überblick über den E-Commerce-Markt in Kanada. Wir haben dann rechtliche Aspekte, die wir im Rahmen einer Vortragenden besprechen werden. Auch auf Steuerrechte wird eingegangen werden. Wie schaut es logistisch aus im Online-Markt? Was sind hier die Vorteile? Wie sollte man am besten hier Waren transportieren, auf was es Acht zu geben? Dann haben wir ein Best-Practice-Beispiel einer österreichischen Niederlassung hier in Kanada, die Ihnen erzählt, wie tut man sich hier am kanadischen Markt im Online-Bereich, und wie gesagt, die Q&A-Session. Zum E-Commerce-Markt in Kanada. Ja, 2022 haben 75 von 100 in Kanada lebenden Personen bereits einmal über Online etwas bestellt. Für 2025 soll das sogar auf 78, vielleicht sogar bis 80% anwachsen. 58% der Einkäufer im Online-Markt sind sozusagen Heavy- oder Hyperkäufer. Das heißt, sie bestellen mindestens 7-mal pro Jahr Produkte online, um sie liefern zu lassen nach Hause. Und diese Hyperkäufer oder Käuferinnen, wie wir sie nennen, das ist auch in den letzten Jahren um 46% gestiegen. Das heißt, wir erwarten noch höhere Steigerungen. Übrigens, 52% der Einkäufer sind eigentlich Einkäuferinnen, sind weiblich. Das heißt, Frauen shoppen lieber online als Männer. Und die häufigsten Einkäufer sind sozusagen die Double Income No Kids, also Paare ohne Kinder, die gerne gemütlich online einkaufen wollen. Worauf achten die Leute beim Einkauf? Also wichtig ist ein kostenloser Versand und vor allem auch Rückgabebedingungen, die klar kommuniziert werden, weil 37% der Einkäufer neigen nicht online zu bestellen, wenn nicht gleich von Anfang an klar ist, wie die Lieferbedingungen sind. Und mehr und mehr achtet man auch auf den ökologischen Fußabdruck, was Produkte betrifft. Also Kundinnen und Kunden schauen auch nach, wie umweltbewusst die Unternehmen sind, wo sie das Produkt bestellen. Wenn wir uns die Umsätze im E-Commerce anschauen, bis vor Covid war es circa bei 2 Milliarden Canadian Dollar pro Monat. Das ist dann rasant hinaufgestiegen auf 4 Milliarden. Seitdem gab es immer ein Auf und Ab, also eher eine Seitwärtsbewegung, aber zumindest kann man feststellen, dass es gab jetzt keinen Rückgang mehr auf Pre-Covid-Niveau, sondern man bleibt stabil auf einen ca. 4 Milliarden Canadian Dollar Umsatz pro Monat, der ziemlich sicher langsam sukzessive weiter und weiter ansteigen wird. Dann, welche Produkte werden vor allem eingekauft? Und es sind 70% aller Produkte sind eigentlich in 3 Produktkategorien zu finden. Über ein Drittel oder knapp ein Drittel sind elektronische Geräte. Dann knapp 20% ist Mode und Textilien und Sportartikeln werden auch knapp zu 20% nachgefragt. Die Keyplayer, natürlich ist es Amazon, wo monatlich ca. 160 Millionen Besucher zu verzeichnen sind. Aber es gibt auch andere Player am Markt. Da sind einmal zu nennen die Ketten oder Supermarktketten, so wie Loblaw, Costco oder Walmart. Dann haben wir Best Buy, das ist vergleichbar wie Saturn Mediamarkt in Österreich, vor allem mit elektronischen Artikeln. Dann Home Depot, sagen das Pendant, Baumarkt so wie Obi. Indigo, vor allem Büchermarkt, das wäre, wie wir in Europa kennen, Thalia. Und dann gibt es noch Hudson Bay als Department Store und Shopify und Kijiji sind auch also Anbieter, die Waren aller Art anbieten. Vielleicht noch zum Schluss, bevor ich dann an die Vortragenden weitergehe, beziehungsweise die etwas näher vorstellen werde. Zahlungsmittel, wie zu erwarten, knapp 60% verwenden Kreditkarte, aber auch jeder Fünfte bezahlt online mit PayPal. Die Debitkarte hat auch zumindest 15% der Leute neigen, mit Debitcard zu zahlen. Interact Online sind einfach Überweisungen und Prepaid Card, die sind so knapp über 10%, aber dürften immer mehr eine geringere Rolle spielen. Kreditkarte ist hier sehr wichtig. Man bekommt, wenn man zahlt, auch Punkte und die Kanadierinnen und Kanadier sind fleißig Punktesammler. Daher wird vor allem vermehrt mit Kreditkarte versucht zu zahlen. Ich darf Ihnen kurz vorstellen, unsere heutigen Keynote-Speaker. Das ist Monika Schirdewan, Ivana Karac als zweite Vortragende, Andrew Wayman von Ship Noble als dritter und Mark Cascanet, last but not least, unser Best Practice Beispiel. Vielleicht näher zu unserer ersten Expertin. Monika Schirdewan ist Rechtsanwältin bei Let Associé, SENCLR, mit Sitz in Montreal. Sie hat Schwerpunkt auf europäische Unternehmen, insbesondere aus Österreich, die in Kanada tätig sind. Sie ist auch unsere Vertrauensanwältin von unserem Außenwirtschaftsbüro in Montreal, aber auch in Toronto und auch eben von der österreichischen Botschaft in Ottawa. Und gleichzeitig schon seit vielen Jahren vertritt sie quasi die Europas rote Fahne als Honorar-Vizekonsulin Österreichs in Montreal. Unsere zweite Vortragende ist dann Frau Ivana Karac, Steuerberaterin bei Fritsch, Leiter und Karac, eigentlich auch unsere Vertrauenssteuerberaterin, die uns immer sehr gute Tipps gibt, hat eine große Expertise in Steuerplanung und Steuercompliance für private Unternehmen. sehr gute Erfahrungen mit nicht ansässigen Firmen, die in Kanada Geschäft tätigen und Beratung zu Steuerfragen haben. Aber sie bietet auch Dienstleistungen an im Bereich Buchhaltung und Lohnabrechnung für lokale und nicht ansässige Unternehmen. Andrew Wayman hingegen ist Gründungspartner von Shipnoble. Shipnoble bietet Lösungen im Bereich Lagerhaltung, Bestandskontrolle, Zollabfertigung, B2B und B2C, Verteilung und Logistik an. Hat ein System von globalen Netzwerken mit vertrauenswürdigen Partnern aufgebaut und gibt auch Orientierungshilfe für Unternehmen am internationalen Markt, vor allem wenn es um Logistikfragen geht. Unser letzter Vortragender ist Mark Cascanet. Er ist Managing Director der kanadischen Niederlassung von Anita Dr. Helbig GmbH. Das ist eine Firma, die vor allem Unterwäsche, Sport-BHs erzeugt und hier in Kanada als auch USA vertreibt. Er ist verantwortlich für die Expansion des Unternehmens in gesamt Nordamerika. Ein Experte der Logistik und vor allem ein Experte mit Schwerpunkt auf dem nordamerikanischen Markt, blickt auf 30 Jahre Berufserfahrung zurück und kennt sich gut aus mit Komplexitäten, die beim grenzüberschreitenden Handel auftreten können, insbesondere zwischen Europa, aber auch zwischen Kanada und USA. Daher kommen wir jetzt zu unseren Expertenpräsentationen und I would like now ask Monika Shirdewan to enter the room, and the floor is yours, and I would like ask you to start with your presentation. Thank you.
Great. Well, thank you very much, Mr. Postel. I appreciate the invitation of being present here today with you. As mentioned, I'm a lawyer at the law firm Welche. We have offices in Montreal and Toronto, and we work mostly with European companies and with many Austrian companies coming to Canada to do business here. For myself, I'm born and raised in Montreal. My ancestry is Austrian and German, so if you'd like to continue the conversation at some point in German, it would be my pleasure to do so. Now I will share a short presentation. Maybe you can let me know once you see it. I will think that you do. So when we talk about e-commerce into Canada, we talk about an Austrian business or person who will be selling their products into Canada, which is, of course, one country. Not just a very big one, as we see on the map, which you've seen most likely many times before, but also one which is divided up into provinces and territories. And so I put the map here just as a reminder how it's divided up, as Canada is a very decentralized federal state, with the provinces and the territories having a lot of jurisdictional powers. This means very practically that when we speak about e-commerce, we'll be speaking in the next few minutes about federal laws, which are applicable in the same way to all of the provinces and territories, and also about provincial laws. And for example, we'll be talking about Consumer Protection Acts, which are provincial laws. And in this case, and often as is the case, provincial laws will have the same or goal and objective, but will have different ways of getting there, sometimes very similar and sometimes with some distinctions. I'm going to go through the sales cycle with you and point out some very broad and general principles in the next few minutes. And then, of course, these are always subject to some limitations and some conditions. And so these are really, again, broad principles throughout the sales cycle. First of all, the first step is, of course, on your side, how to interest Canadian customers, how to reach them, how to advertise to them, and how to contact them. So we'll spend a few minutes on this. Then, once they are interested in your product, the next step is to actually conclude that sale, enter into that sale contract with them, and deliver your products. And then, at times, there can also be some rights of the sellers post-sale and some obligations on your end. If we first look to the advertising part, so the first part when you're interesting your Canadian customers into your product, things to keep in mind from a legal perspective. First of all, advertising principles, which are set out both in a federal law, in the Competition Act, and also in provincial laws, in the various Consumer Protection Acts, and some other laws as well. The main goal of these laws is to make sure that the customer, whether he be a consumer or not, has all the information to take an informed decision. So the goal is to prohibit anything that is intentionally or unintentionally misleading to that customer. And maybe one anecdote from my practice, something I've seen a few times is completely unintentional misleading of a customer, in the sense that often we have a European company who would like to do business in North America. Sometimes the first market that's being addressed is the United States. It's a big market. It's our neighbor right here. And so perhaps the product descriptions are prepared in English. There's maybe an inventory in the States. The prices are adapted into US dollars, and the website is set up. At some point, maybe then it's opened up to Canadian customers. Maybe there's some Canadian references, some Canadian advertising leading back to this initial website. I, as a Canadian customer, will go into this website, will see the Canadian references, will think in Canadian terms, and will see a dollar sign, thinking that it's my dollar sign, which is the Canadian dollar. And then maybe get a surprise at checkout, maybe when I get the receipt, when I check my credit card statement, and notice that the price was maybe a little higher than I had thought. And so this is kind of a classic example of completely unintentional misleading of a customer, but something to take into consideration when we're setting up a website that is for North American market or for Canada specifically, or maybe you don't have a Canada specific website, but then just to be conscious of how a customer might perceive the information that's there to make sure that it's adapted for them. Something else to keep in mind when advertising to Canadian customers is our anti-spam legislation. So the actual name of the law is quite a bit longer. We call it the anti-spam law. The very general principle here is that consent is required by a customer to receive any electronic messages, and that this is usually opt-in consent, which is required. So any mass mailings, mass text messaging, other electronic messages which are aimed at a Canadian customer will need to take this into consideration and ways found to be able to reach them either differently or to obtain their opt-in consent. Now, when we move over to the actual sale, so once the customer is interested, ready to buy, what happens in an e-commerce setting? Well, first of all, it is a sale contract. And so the general principles of contracts will apply also to an online contract. And there are different principles here, with one of the main ones being that, of course, the parties have to consent in order to enter into this contract. So if we go back to what we had said before, they can only consent if they have all the right information. So again, important to give them the right information. And for consumers here, they're actually under the specific Consumer Protection Acts. There are specific provisions which will provide that specific information really has to be provided. It's assumed that it will be in other contracts as well, but it's really detailed out in most provinces. For example, the exact price, what's included. For example, if there are additional fees, shipping fees, for example, which cannot be estimated, but that's specifically provided for so the consumer can have all this information to take an informed decision to consent to the contract. And maybe in this context, just a word, I'm mentioning general principles. I'm also mentioning a lot on the consumer side. So most of the general principles will apply to all sales, business sales, B2B and B2C. A consumer is considered to require more protection legally. And so every province has a Consumer Protection Act, which again has a very same goal of protecting the consumer, will have very similar provisions, but sometimes also some distinctions. So in this case, most will provide, again, specific information that has to be provided before the consumer can agree to the sale. And when we say agree to the sale and consent, what does that look like in e-commerce? So of course, back in the day, we had paper documents and we would sign with our hand, with a pen to sign a contract. And in Canada already over 20 years ago, the government realized that there was more and more online commerce and that this had to be addressed. And so the Canadian government had a model law which essentially provided that there's a functional equivalence between paper documents and electronic documents. This was just a model law that was being basically proposed, suggested to the provinces, and most provinces then took on this model to adapt their own law, to have their own law. And Quebec has a very similar law trying to achieve the same goals, again, essentially to confirm that what happens electronically can be functionally equivalent to what happens on paper, and also providing that consent, for example, doesn't have to be anymore a signature. It could be an e-signature, but doesn't have to be an actual signature. It can also be provided by clicking on a button, an I accept button, I agree button, etc. So to summarize, an electronic sales contract is a legal agreement, and if it's meeting the other conditions, then it will be a valid agreement, which will be binding on both the parties. Then, of course, we think about this agreement and we think of which law will apply. So if we're looking at an European, an Austrian company doing business into Canada, so if you do not have an entity here, but you're doing really all the sales from Austria into Canada, most likely you'll wish for your usual standard terms and conditions to apply. And you will most likely also have Austrian law that will be provided for as applicable law. Most likely jurisdiction being Austrian tribunals. So if there should be a claim, there should be a concern, a problem, this is supposed to be resolved in front of the Austrian courts. Generally, as a general principle, this will be accepted with some limitations and conditions. And again, consumers are more protected in that depending on the province and depending on the legal principles applicable in that province, it is possible that the consumer will still be able to enjoy his minimum protection, which is provided in his home jurisdiction. What that means is that, for example, if a consumer in Quebec has a right to have the specific pricing information under Consumer Protection Act of Quebec, and your terms and conditions do not provide for it, he will still have that right because Consumer Protection Acts are mandatory and they're public order in Canada. So this is just something to keep in mind when you're applying your terms and conditions and you'd like to use them also in Canada. It's always a good idea in our recommendation to have them checked, not for them to be redone or redrafted. It's generally not necessary, but to have them checked under the different provincial laws where you'll be selling into to make sure that they comply with the minimum standards so that even if they do apply, so that you're aware of them and that there are no surprises. Jurisdiction as well. Mostly the jurisdiction of a foreign country will be recognized and respected. In some cases, if there is a close attachment to Canada, to jurisdiction in Canada, that can also be taken into account. And depending on the province, a consumer may have the right to make a claim in his home jurisdiction as well. At the point of the sale, this is also the time that we're asking for different types of consents, not just the consent to the contract, the terms and conditions, but also generally the consent to collection of data. In Canada, we have a federal law which governs data collection and privacy, and which applies to the provinces unless a province says, I would like to have my own privacy law, which, for example, Quebec has done. Quebec has just modernized its law, making it closer to the GDPR rules. And the federal law is actually also being modernized to afford a bigger protection on data. Generally, as in most jurisdictions, the main principle here is that for data to be collected, to be saved, consent is required. And so this is the time that we obtain that consent. And maybe even before, if somebody's browsing on your website, depending on what cookies are being used under provincial Quebec law, and then depending on the changes that will be made to the federal law, certain consents must be given. For example, a consent to non-essential cookies, which could be tracking personal information. And then speaking of consents, this is also generally a good time to be asking consent for the customer to be signing up to your newsletter and your mailings and your special offers and sales, because as mentioned, usually under Canadian law, opt-in consent is required. And this is usually the time that a customer is engaged and is able to provide that opt-in consent. Lastly, for the sale part of the sales cycle, important to remember that there are two official languages in Canada, French and English, and that's on the federal level. There are some provinces who have just let that be. There are some provinces who have actively said that they are officially a bilingual province. And there is one province, the province of Quebec, which is also recognized as a nation, that has said that French, because of its history and its culture, that French is the official language for Quebec. Depending on the product, depending on what you're selling into, depending on the product information, that information might have to be in both languages or could be in one or the other. In most situations, the labeling, the description, and the manuals will be in both languages. So also something to keep in mind when selling into Canada. If, for example, that is in English, or perhaps you have separate ones, if you're already selling into jurisdictions like France, then maybe to think of adapting them and to be combining them for the Canadian market. And then quickly, just a few last minutes on post-sale rights and obligations. So after the sale goes through, the contract is concluded online. You are delivering your products into Canada to the customer. What kind of rights and obligations are there? For B2B agreements, these are usually set out in the agreement. And then B2C, there are some specific rights that consumers have. This will depend on the different provinces and the Consumer Protections Act. Sometimes there's a cooling off period that is allowed. Sometimes there are specific timeframes in which a consumer can terminate an agreement if he hasn't received the product within a certain time frame, or a contract in a certain time frame. So there are specific rights here. In our experience, often the rights that are being given by the seller are actually more generous than what's provided for in the law. Customers and consumers have gotten very used to certain rights, changing their mind, returning a product, sometimes without a fee. So this has become almost a business practice, a norm, even though the law does not usually allow a customer just to change his mind after the sale is concluded and just to return a product, and even less so at the cost of the seller. So often these are not even issues that come into play, because often these are things that are dealt with right away by the seller. And our recommendation is it's always good to have a very strong customer support service adapted to the Canadian market, available in both of the official languages, to be able to proactively settle these concerns before there's even a claim made. So this was just a broad overview, just a reminder that, again, these are just general principles, very similar from one province to the next, but every province has particularities. So there's some things that I've mentioned which maybe apply more or less to one of the provinces or another. So that was just a short reminder at the end. And again, very happy to discuss further and to answer any questions at the end of this webinar.
Thank you, Monica, very much for your very interesting presentation. I know legal affairs, you can probably talk 2 hours about this, but we have only 1 hour. So I want to thank you and quickly hand over to Ivana regarding the tax perspectives, because also tax could be sometimes very tricky in Canada because of the different provinces and the different tax rates. So Ivana, the floor is yours.
Thank you, Mr. Postal. Thank you for the introduction. Everyone can hear me? All right, great. So my name is Ivana Carrick. I'm the tax partner at Birchley Carrick, and we are located in Waterloo, Ontario. Many of our clients are Canadian subsidiaries of foreign entities, primarily located in the Western Europe region, but we do have clients coming from the US and other parts of Europe and the world. Here to talk to you about the sales tax implications and income tax implications of doing business in Canada. So to start off, sales tax in Canada, we have sales tax at the federal and at the provincial level. The federal sales tax is referred to as the GST, Goods and Services Tax. It's 5% tax in Canada. And then we have, I skipped ahead. And then we have the provincial sales tax, which is referred to as the PST, which ranges between 6% and 8%. Many provinces are harmonized with the federal government, wherein the federal government administers the provincial sales tax on behalf of the provinces, and this is referred to as the HST. This is 13% in Ontario and 15% in the remaining provinces, which are harmonized with the federal government. And then lastly, we have Quebec sales tax. Quebec is a little bit different in that they do have their own provincial sales tax regime, but they tend to be somewhat harmonized with the federal government. The federal, the GST, HST, and QST are both structured in similar to a value-added tax, wherein the sales tax is charged along every step of the way, and then input tax credits are claimed for GST, HST, QST paid on expenditures, whereas the provincial sales tax is structured more like a retail sales tax, wherein at the end of the day, the PST is only charged to at the consumer level, and exemptions are available along the way in many cases once providing supplies in that particular province. Okay. So all companies doing business in Canada should be registered for GST, HST, unless they meet a very narrow list of exemptions available to them. One of the exemptions is the small supplier exemption, which is related to the amount of revenues that the company has in Canada. So small suppliers are considered to be small suppliers if their annual revenues are below the $30,000 threshold. That is the most common exemption that we see. Depending on the type of supply that you're providing to Canadian customers, it can be considered taxable, zero rated, or exempt from tax. If it's taxable, it's just taxed at the standard GST, HST rates, ranging between 5 and 15%. Zero rated and exempt supplies are both taxed at a rate of 0. There is a difference between the two in that zero rated supplies are entitled to, so companies supplying zero rated supplies are entitled to claim input tax credits for their expenditures in Canada, whereas suppliers providing exempt supplies are not permitted to be registered and are not permitted to be claiming input tax credits. When you are registered for the GST, HST, the rate that you charge is dependent on the place of supply rules. So depending on the province that the product or service is supplied, and it also depends on what type of supply it is. So depending on if it's like a good service or an intangible personal property, the place of supplies rules will work a little bit differently. So important to understand that. It's important the revenue threshold, the type of supplies, and the province in which you are supplying your products. Another exemption that we commonly see is related to non-residents. So firstly, non-residents who have a permanent establishment in Canada are required to be registered, and they're treated in the same way as Canadian companies. And a permanent establishment can be an office, it can be a server from which you're providing electronic services, sales or services. It can be a variety of things. It can be an employee who has contract authority in Canada. But if you are carrying on business in Canada for GST, HST purposes without a permanent establishment, you are still required to register for the GST, HST. So whether or not you're carrying on business in Canada for GST, HST purposes depends on a number of factors. They're listed here on this slide. CRA looks at all the factors together. Not all have to apply to be considered to be carrying on business in Canada for GST, HST purposes. And it will really vary on a case-by-case basis. It depends what you're doing. So if you are providing a service and it's exclusively a service, obviously if that service is provided in Canada, they will place a higher weight to that. But if you're providing a product and there's a small service component, then there'll be less weight applied to that particular factor. So again, it's very case specific. If you are not carrying on business in Canada for GST, HST purposes, you may still be permitted to register on a voluntary basis if you meet certain criteria. So that would be if in the ordinary course of conducting business outside of Canada, you are regularly soliciting orders from Canadian customers, or if you're providing a service in Canada. Voluntary registration can be beneficial because it allows you to claim input tax credits on expenditures incurred in Canada and also on importing products into Canada for which you're charged a 5% GST on import. So without being registered, you would have no way of really recovering that GST paid on import. Once you are registered, you are required to provide a $5,000 security deposit to the Canada Revenue Agency. And the CRA periodically reviews whether that security deposit is sufficient for their purposes. So if when you file your GST, HST return, you have a balance owing of $50,000 and they see year to year that this is the case, they will increase that security deposit. It is a refundable deposit, meaning that when you're no longer conducting business in Canada and you close the GST account, it is received, refunded back to you. And again, once you're registered, your filing obligations vary depending on your sales threshold in Canada. Revenues below $1.5 million, those entities are required to file on an annual basis. Revenues between $1.5 and $6 million are required to file on a quarterly basis, and anyone with revenues in excess of $6 million is required to file on a monthly basis. You are able to also increase your filing frequency if you want, and at times it may be beneficial to do so as well, so something to consider. So everything that we've talked about so far has been related to federal sales tax and has been related to the regular GST, HST regime. Canada sales tax legislation is evolving. Both the federal and the provincial governments have expanded their legislation in recent years to account for online marketplace sales, digital products and services. And then a few years ago, new legislation was introduced to level out the playing field between Canadian and non-resident entities supplying certain products and services to Canadian consumers. This does include digital businesses supplying intangible assets, services, and short-term accommodations facilitated through digital platforms, as well as sales of goods located in fulfillment warehouses. So there is a simplified regime available under the GST HST program. And what it entails is well, for one, it's not under the regular regime in that the sales tax that's charged is only applicable to consumers when sales are made to consumers. And in particular, those can be individuals. It can be businesses who are not registered under the normal regime. So it can be small suppliers who have revenues below the $30,000 threshold, or it could be organizations who are not registered under the sales tax regime. So the simplified regime is applicable to non-residents who don't otherwise carry on business in Canada, but do have revenues in excess of $30,000. So we talked about that. Okay, as I mentioned before, there are 4 provinces which have their own PST regime. That is British Columbia, Manitoba, Saskatchewan, and Quebec. The rules vary from province to province. However, some of the common things that we do see is that when you are selling to a reseller, you tend to be exempt from that. So sales made for resale purposes are exempted. If you have solicitation targeted to consumers located in that province, or if you have inventory stored in that particular province, that's an important factor to consider, and you may be required to register in that particular province. There are exemptions in some provinces for revenue thresholds. And And then in some cases, there's no threshold at all. You're required to register unrelated to anything else. So that is the sales tax. And then from an income tax standpoint, again, you have to consider if you're carrying on business in Canada for income tax purposes. Companies who are carrying on business in Canada for income tax purposes are required to be registered in Canada and file a tax return. If that income is earned from a permanent establishment located in Canada, the company is also liable for tax in Canada. If it's not carrying on business through a permanent establishment, it can claim treaty protection. In order to claim that treaty protection, it does have to file an income tax return in Canada. And lastly, whenever you're carrying on business through a partnership, it can complicate things in that it adds to the administrative burden and filings in Canada because partnerships are not taxable entities in Canada. So that concludes my presentation. I'm not sure if I'm over time. If there's any questions at the end, I'd be happy to answer.
Thank you, Ivana. It's interesting to see the tax jungle in Canada. And I think there will be probably some questions then afterwards because it's difficult to explain everything in such a short period of time.
A lot of information for sure.
Yeah, speaking of time, we're a little bit behind the time, so I would like to ask Andrew and then Mark to please limit the presentation to 10 minutes. And I would like now to give the floor to Andrew from the co-founder of ShipNoble, the logistic expert. So Andrew, please, the floor is yours. Switch on your camera and your microphone and tell us more about logistics in Canada. Thank you.
Thank you, Mr. Postal. I really appreciate the opportunity to speak on the panel. I hope everyone can hear me clearly.
Yeah, we can.
Awesome. Yes, I hope I can bring great value to today's discussion. Thank you, Monica and Ivana. That was great presentations. To tell you a little bit about ShipNoble, we are an end-to-end logistics management system. We build or create tangible and technical solutions for businesses that are looking to scale across North America, especially into the US markets. Some of our solutions include warehousing, management, LTL and FTL, inbound and outbound shipments, B2C and B2B order fulfillment. A lot of these tangible solutions are obviously directed towards e-commerce and business-to-business solutions for tangible goods that are entering into Canada or being held into Canada. 3 points, I guess, in today's presentation. There's 3 points that I really wanted to cover that I think that'll be useful. One of them is working with third-party logistics companies. I think this is very important, and I think this is something that you might have questions later on that we can discuss. The second is the CBSA, Assessment and Revenue Management, otherwise known as CARM. And CARM is something that was rolled out by the Customs Border Service Agency in 2021 and is now coming into fruition and going live in May of this year. And it's very important for anyone that's importing goods into Canada. We'll touch on that a little bit later. And then third is Section 321 de minimis program, which benefits businesses that are selling product to the US and holding product in Canada. So firstly, I think that just if I can share about working with third-party logistics companies, as we are one, it is very important to find or find the right resources. And what I mean by that is that there are companies out there that provide tangible solutions, and there are also companies out there that are a great resource for your business, meaning that they have built networks and frameworks to allow your business in Austria to enter into the Canadian market and essentially plug and play. And what I mean further to that is, for instance, at ShipNoble, we've provided or we've created an economy of scale platform, or we've adopted that, I should say. And that platform allows us to create networks with shipping carriers across Canada, whether it be LTL, FTL, or courier companies. We've built networks of customs brokerages, and we have a host of verified partnerships that we utilize on a day-to-day basis to help alleviate the processes that companies in Europe would be generally have to be going through in order to get product to Canada or facilitating product in Canada and into the US. So that is one very important point when dealing with third-party logistics companies, is making sure that their network is strong and has a great reach in order to scale your product. It's one thing getting your product into the country, it's a whole other thing to get it across the countries, and that's very important. Something that was brought up earlier by Monica, I believe, is the point about selling in Canada and selling in the US. There is obviously knowing your marketplaces is very important. So I'm sure everyone has e-commerce marketplaces where they're selling on currently, websites. So making sure that you understand that in Canada and in the US, you're able to use particular marketplaces that can have that can essentially have your inventory in 2 separate warehouses, and selling from those 2 separate warehouses. So selling from the US, and customers that are in the US are pulling product from that specific warehouse, and product that is in Canada, customers are shopping off of that marketplace, and that's pulling product from your Canadian inventory. However, you are able to, if you have the right third-party logistics provider, you are able to actually house that inventory in one place and actually ship from both. So you can keep a solid control of your inventory management, which is one of the most important parts of selling e-commerce and in general. And back to that inventory management piece. It's very important when obviously, as you guys know, all the businesses here, if you're selling e-commerce, is your line of sight to inventory. So making sure that you're working with a third-party logistics company that can provide you with that line of sight is crucial for your success. And I'm sure I have a lot more to share when it comes to third-party logistics, but I want to move on for time's sake into some of the bullet points that I have created for CARM. As mentioned, the CBSA, or the Canada Border Service Agency, has created a project called CARM. And that CARM is the CBSA Assessment and Revenue Management project, basically. Essentially, it's a CCP, or they've made it quite fun, actually. And the reason why I say that is because they've created a dozen or so acronyms that'll make it even more interesting to work with them. So if you hear me using acronyms, I'll try my best to explain what the acronyms mean. But the CCP is the CBSA client portal. And in the client portal, it's actually going live, I think, May 13th, 2024. And that portal is essentially the new way to assess and pay duties and taxes imported on commercial goods. This will be, in fact, the only official system of record that importers and trade partners will be able to use to pay duties and taxes. And it's very important to understand as this has changed. The most important point with this new portal is the financial security part. So the CBSA requires all importers to participate in the RPP program, which is the Release Prior to Payment program. Therefore, you're required to provide a bond, and they have multiple options in the bonds, one being obviously a cash bond, and the second being a surety bond. Now, we dive deeper into this, obviously, and I will be able to provide Mr. Postal with a PDF after the fact that shares a more in-depth overview of what we're talking about today. Now, as I was mentioning, the cash bond should be equal to or greater than the importer's highest monthly accounts payable to the CBSA within the most recent 12-month period. This is very important to note that this is a cash bond that we have to be provided by the importer, and that's the biggest change. Whereas the prior to, the custom brokers were able to provide this essentially for the importers. Now everything rests solely on the importer's shoulders to have this done. This is also important, as if a lot of companies are on here today, if you have not registered on on the Canada Revenue Agency or the Government of Canada website. If you have not registered a business number, it is important to do so prior to the date of release of the program. And the reason why is because if you're not, this will delay any product or any shipments that are coming in to the country. This will be delayed from release. So yes, the other portion of this that I wanted to talk to is if you do not have a business number, this would be your first step, along with a program account identifier, otherwise known as an RM number. This can be all found on the Canada Revenue Agency. From there, you would be able to set up an individual user account on the Government of Canada website. Then link your user account to your business account. And this is all done in the CCP, which is, I mentioned earlier, the CBSA client portal. And hopefully, like I said, there's so much here to dive into. This is just an unpack. This is just kind of like a high level overview of actually a pretty significant, I guess, a significant project that the CBSA is rolling out. And then moving into something that I wanted to talk about, and I know that my partner Mark will be speaking about it as well, so I didn't want to jump into it too much, but it's the Section 321, which is the de minimis. Now, the de minimis is a essentially it's based on our ever expanding e-commerce world. Shipping to the U.S. from Canada presents an incredible opportunity for many businesses looking to tap into our largest market, being the U.S., thus scaling across North America. By shipping southbound and having their goods cleared by customs allows American markets who have similar demographics to assess the favorable exchange rates that Canada, obviously, we have. And that also works in favor for European countries as well. Basically, what the 321 or de minimis program is U.S. brands, U.S. bound shipments that are qualified and valued at $800 USD or less benefit from duty-free entry of goods. Aside from the financial benefit, there is considerably less paperwork, allowing for faster processing times and eliminating custom delays. And again, the importance of finding the correct logistics partner or third-party logistics partner is of key importance, because they're able to provide you with the gateway in order to get your product into Canada, and then when it's in Canada, warehousing it and getting it across to the US. Yeah, I mean, thank you guys for your time. I know, Mr. Postal, you wanted to keep it a little tight. I hope I've covered some key points, and like I said, I'd like to share a PDF afterwards that could dive a little deeper into some of the key points that I shared today.
Thank you, Andrew. I appreciate that you will provide us later with a PDF with more information about your presentation. As it was mentioned, Mark will then probably and for sure dive deeper into the de minimis rule for US, because this has a big change in the business they were doing. And regarding the CALM system, when we will send you information about the link of this webinar and the presentations, we will send you also clear information about what CALM means, what you probably have to do after 13th of May, when this will get into force. So Mark, the floor is yours now, and we want to know how business is going on in your company here in Canada and in North America, especially.
Okay, thank you very much, Gregor, and pleasure meeting everybody. I've got my timer running so I don't run out. I hope everybody can see my screen. I'm Mark from Anita, Canada. I'd just like to share our history on what we've done in Canada and the North American market, and try to put, I think, a pragmatic approach to what everyone has talked about today. So let me just... slide change. There we go. So just a brief overview. We're a legacy European business. I won't read the details. I'll let you guys read it. In the Canadian market, we had a distributor 10 years ago. We bought our distributor. They brought me on board, and we literally tripled our business in 10 years in a mature market, which is the lingerie and the swimwear business. It's important to note for us where product is made, because it does make a difference in terms of where you want to establish your business. For me, I'm a huge advocate that Canada should be the central location for business across North America because of significant financial benefits and savings. I'll share some with you this morning. So I picked COVID as a starting point because we chose COVID to actually retool or reorganize our business in North America. Our primary logistics center continues in Kufstein. Product from European production as well as Asian production flows into Kufstein. We then were shipping products to a Canadian warehouse once a week and to a US facility once a week as well. Between the two facilities, we were storing almost $2 million worth of inventory to cover the North American market. What are the changes that we made? We merged our logistics center into one facility in North America, picking Toronto as the location. Toronto has rapid access to all of North America for both ground and air freight, obviously. It was very interesting. We were in Florida in the US. When we moved to Toronto, we actually saved about $70,000 a year in shipping costs across the United States, shipping from a foreign country, not shipping domestically, just because we are on a major traffic lane for shipping. Why do we continue to run a warehouse in North America? I think we all know Amazon has trained most consumers to believe they want the product today or tomorrow. I had a meeting with UPS a couple of weeks ago. They're now introducing Saturday delivery. And in 2024, I believe they're offering same-day delivery because they recognize businesses do not always want to be on the Amazon platform or deal with Amazon. They want alternatives, and UPS is trying to offer that. The other big reason for Canada is our status, I think, as the world's largest partner in terms of having the number of free trade agreements signed with other countries in the world. What does our business look like today? Kufstein still serves as our primary logistics center. We drop shipments twice a week from Kufstein to Canada now, and we reduced our inventory by almost 50%. To run in one facility. The other thing that I didn't put on this slide is we do bring product in directly from Asia to take advantage of the free trade agreements that exist. As I mentioned, free trade everywhere seems to be Canada's motto. We have the CPTPP, which is a mouthful to say, which is us bringing goods directly from certain Asian countries that have partnered in this trade agreement. We have CETA that we're a member of with all the countries of Europe. And then we have the USMA, which is our updated free trade agreement with the US. In the case of Anita, 60% of our goods now arrive into our facility in Toronto duty-free. It's huge. Some of the things that were mentioned, the de minimis, the reason Canada works so well is we bring these goods in from all over the world. We can ship to the US to $800 per day, per location, duty-free. There are some rules related to that, obviously. But for us, it means 65% of all our US-bound business enters the US duty-free now. 40% of the goods that come into Canada that we pay duty, a percentage of those that are exported to the US, we then reclaim the duty back on those. But just on the duty savings and the freight savings in the US, for us, it was over $600,000 annual savings. So I urge you, when you're looking at where you want to do business, think about Canada as your central focus point to drive and run business in North America. Best practices, we heard from lawyers, accountants, and shipping logistics companies today. For us, I'm more on the top level. Obviously, dealing with subsidiaries, whether you set up a Canadian subsidiary and or a US subsidiary, require legal expertise to discuss non-arm's length parties and their relationships. It's important to understand in every relationship who the buyer is, who the seller is, and in the case of de minimis, who we are shipping to. These distinctions make a huge difference on that $800 de minimis. And for me, a law firm that has trade expertise, also working with a licensing agreement is paramount to the success of an organization. Similarly, on the accounting side, transfer pricing is critical. I know we just finished our 2023 taxes, and we literally have to certify that we have a transfer price agreement where we are looking at benchmarks within our industry. What are the price points that are established, and are we within those criteria? I think the same structure exists now in the EU. I'm going to just wrap it up at this point. I think I'm under 7 minutes. Here are some of the key questions I think that need to be addressed in terms of deciding how and where you're going to do business in North America. My final slide that will be shared with you in the presentation later is a little calculator that I created on how to figure out where your savings will exist to drive your business and be efficient at it. Obviously, this side of the discussion is really focused on the logistics and the operation, but there's a clear marketing and sales side and a value proposition that you need to generate before getting this far. So I want to thank everybody for participating, and for Gregor for inviting me to participate with you today. And I'm available for any questions, and I wish everybody the best of luck entering North America.
Thank you, Mark, especially that you made a very quick presentation. We are now coming to the question and answer session. So I would ask all the speakers to switch on the camera and the microphone so that we can share the questions which so far I have already gathered. And they have one interesting question from a company. They are selling services to Canada. For example, German online language courses, and if the provider is not permanently resident in Canada, what has to be taken into consideration? So maybe Ivana, what is from the tax perspective to do if someone is offering online German language courses from Austria to Canada and not permanently resident in Canada? What kind of tax considerations you would advise this person?
So of course, the first thing you always have to consider is if they're carrying on business in Canada for a sales tax standpoint. You have to consider whether those are provided to a business who is maybe has employees who are learning German, or is it provided to individuals? You have to consider where the individuals are located to see if you have sales tax implications and in which province. And then, yeah, so all the points we discussed at the slides. You have to consider where the person is, whether it's a person, if it's a business, if you're providing it for resale purposes, the extent of your presence in Canada, to see if you have any sales tax or income tax obligations here.
If we take the case that it's an individual consumer who likes to learn German online, provided by a service provider from Austria. So
you also have to consider whether it is something like we're doing today, where it's a live discussion, or you have to consider if you're providing products, meaning you're providing some sort of audio services that they can either stream or download. So whether it's truly a service, or if it's an intangible, or if it's a product. So there's all those different things come into play when considering if the GST applies, and if so, at what rate. And again, if it's revenues below the $30,000 threshold, that's also important to know.
Okay. So it's always a case by case, and we cannot just give a correct right answer. I have another question. one company, maybe it's not so more on e-commerce, but in general, and maybe it's something for Monica Shirdevan. They say they are a P2P company, and what they're doing is they sell products to government companies or organizations like towns, states, ministry. Is there any specific requirements to sell to government organizations in Canada? And they were asking, are there any licenses necessary? Can you give us a short answer, or is it difficult to answer the question right now?
I can give a short, very general answer. Happily. So yes. So as I mentioned, Canada is very decentralized. So we have the federal government, we have the government of each province, of the 3 territories. We have municipal governments, which are then within those provinces and territories. So there's many layers of government, like in most jurisdictions, and like also like you mentioned in your message, that you're dealing with actually every level of government. Usually the main principle. So we'd have to look at which level of government. The main principle is that the government will have a public tender for contracts over a certain value. And then if there's a public tender, the question is, how do you access that information? So there's certain levels of government which will have like a website where you can register to get notifications. Depending if it's a public tender, also most of the time, from what I've seen, there will be a requirement that if the company is not a Canadian company, that you're registered. So it's possible not to have to incorporate, but to register your company locally, which means that you'll have an address here. So if there's an issue or a communication, that will be sent to a Canadian address. And then for certain lower value contracts, maybe it's not required to have a public tender for that level of government. But then sometimes that level of government will request you to register in a supplier registry. So again, it depends on which level of government, who's going to be making those rules. If you'd like to participate in a public tender, again, it would be looking at that public tender to see what the requirements are in terms of registration. And if not, to see if you can register as a potential supplier to the government.
Okay, then I have also a question for Andrew. When an Austrian company is choosing a logistic company to deliver their products in the Canadian e-commerce market, what is important to take into consideration? What would you recommend? What should the logistic company bring and offer an Austrian company?
Well, I think it's very important. I think Mark can agree, is that our shipping costs in Canada and North America right across the board is one of the most significant costs to any company shipping or selling product online, whether it be B2C or B2B. I think that one of the most important parts is an Austrian company needs to vet the company that they're working with to make sure that they find out the final costs associated with getting a product from A to B or A to Z, let's say, in the entire mile. When you're able to, access that information, then you can make a proper, how do you say, sorry, lost word here, guys. So just making a proper assessment, I should say, as to who to choose and what logistics company to choose. And further to this is that going back to what I mentioned in my presentation, is that you have to be looking for a logistics company that has networks already built and established. And many companies have a lot of resources, but a lot of companies don't use the economies of scale to leverage costs and then transfer those costs over to the clients. This is something of very key importance.
Okay, thank you. Talking about cost, it was very interesting for Mark in his presentation that you said, okay, at the end, you shifted the warehouse logistics to Toronto, Canada. And so it seems like, and even if it's, we talk about Canada, but as we know, when Austrian companies are looking to the North American market, mostly 8 or 7 of 10 first they look to US market, but now having listened to your presentation, it seems interesting or even more economic value to have the warehouse in Canada, even if you just have the activities first only in the US.
I would agree with that. I think you have to look at where are products manufactured and sourced that companies are selling into North America, because for us, as I mentioned, we're bringing product from Asia and from Europe all in duty-free into Canada. The US does not enjoy the number of free trade agreements that we do. So we have the opportunity to bring those goods in duty-free. And then when you analyze your average order size or average shipment, you can see how many fall below that $800 US threshold. And this is where I really urge having a good lawyer to work on this, because there's a lot of confusion about what de minimis means. And for us, I hired a US trade attorney or trade lawyer, and I had a Canadian firm, but it's $800 per location. And then it gets into your subsidiary, how you set things up. So for us, I give you an example. Anita Canada sells every product to Anita International. That's our US company. We sell it at a transfer price, which means more orders fall under the $800 de minimis value, but we deliver it to a drop ship address that we're instructed by our US subsidiary. The US government recognizes the drop ship address as the de minimis valued address, and thus it arrives duty-free into the US, but it's a matter of working out all the logistics to see that it works. And the 600,000 US dollars I quoted is just the savings that the US enjoyed based on when the goods came direct from Europe into the US market, and then were distributed to the retailers and the consumers.
Okay, thank you very much. Since we're a little bit overrun of time, I would want to thank you, first of all, for your presentation and for your time. I want to excuse to the speakers as well as to the audience that we're a little bit of overtime. In conclusion, I just want to share once again the screen. You have here the contact details of all the speakers. So if you have any further questions, either you can contact them directly or through our office. And just shortly, a big thank you from my side, when it probably works, yes. And two short announcements. We have the boot camp once again in Canada, in Toronto, on the 17th, 18th of June. What can you expect? We have experts like Ivana Karaj. We have legal experts. We have also best practice companies telling you how to do business in Canada, which is helpful for companies coming new to the market or companies which are just here a short period of time. I think it's very appreciated. The people last time really enjoyed it. And the last announcement, once again, we have the Austria Connect North America, 24th to 26th of October in Chicago. So there you can meet a lot of managing directors from Austrian subsidiaries from US, Canada, and Mexico. You can exchange with them. I think it's a good opportunity also to get new connections and to meet new people. Last but not least, this is our contact details. So I want to thank once again a very, very big thank to our speakers for their very fruitful and informative input. And I want to thank the audience for the patience and want to excuse once again for the overtime. And I hope to see you soon in Canada and doing business more frequently in this very dynamic and interesting North American market. Goodbye und auf Wiedersehen nach Österreich, and goodbye to our speaker. Thank you very much.